Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening, everybody. Shout out Empire Traders with that Mike Pence fly on his what's the name? Hey man. Good evening, man. How y'all doing? We starting a little bit later today. We started at 6:30 p.m. Eastern Standard Time because I was asleep. I was taking me a nap and I ain't wake up till 5:51. And you know what I said? I'm not gonna be rushing. So I'm just gonna start at 6 o'clock. Yeah, man. All right. So with that being said, there's a link pinned to the top of the chat of YouTube if you'd like to join us on Zoom so that you may unmute and speak. If you want to ask a question, or if you just want to hang out in Zoom in case I decide to hang up on YouTube, which I doubt I'll do today. I doubt I'll do that today. You know, today was pretty straightforward in price action. So I doubt if I will hang up on YouTube today. But if price did anything that caught you off guard, oh, wait a minute. Before I get into all of that, good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you don't hablo español. You're not tuned to the price action recap. The intraday price action recap. Brought to you by the Smart Money Manuscript. The Smart Money Manuscript, one-stop shop for all things I've talked about on the YouTube page when it comes to Tim. I'm new to the stock market. I don't know anything about stock market. To Tim, I'm not a trader. I just want to learn how to invest for my retirement portfolio, but I don't know where to start. Or Tim, I want to be a actual trader where I swing trade or I day trade.
You know what I'm saying? And I just don't understand how to read the price to, do that. And so I want to know how to do that. And I want to do it with options, or I want to do it with. And so it's just everything that I've ever talked about, all in one stop shop, digestible chunks, just not hour, 2 hour long live streams, right? Complete with little quizzes for you to take to test your knowledge along the way, right? And then, like I told her, I said, hey, I saw a feature where you can go live on the WAP app. So if that if that works out, gang, y'all know, I love going live. I love doing pop-ups. So if that feature on the WAP app, if it works out where I can go live, I'm going to be doing random pop-ups for those who purchase the artery and price, not the smart money manuscript, so that we can have some mentoring. You know what I'm saying? Pop up, do lives. You can, what I'm saying, might be a lesson, might be, what I'm saying, might be a lecture, might be just a Q&A. I might just want to run my mouth, what I'm saying? Because when it comes to the art of reading price action, it's not just, you can't just look at a course and learn the verbiage and just know what to do. You can't do that. You need somebody to hold your hand and guide you. Come on, little baby. You can do it. Take your step. Take your step. Take your step, baby. You fall on your bottom. You know what I'm saying? Here, but all babies had a little when they trying to learn how to walk. You feel me? Who we got up here? We got Lump up here. We got the Mike Pence fly along with Empire Tradings. We got light skinned Deborah up in here. We got Kim over there in Zoom kind of slack today. We got Kim over there in YouTube land. We got Here to Learn and Share over there. We got Valentine over there. We got Sturdy AF over there. Sturdy AF, welcome back. I saw your post. You said, I'm back. Welcome back. And we missed you. Hopefully the W2 don't have you in a headlock for too much longer. All right. You was looking for the stream earlier. I jalapies. Yeah, I was sleeping. Maybe that's why we so light. Everybody thought I wasn't going to stream, and they went on about their merry little way. I don't think people just sit around and wait to hear what little Tim Rogers got to say, man. I appreciate y'all for pulling up and listening to me, but I know y'all have lives. I'm not, you know what I'm saying? I'm not the the most important person in the world. I'm not the biggest YouTuber in the world where people just be sitting around waiting for my live stream to come up. You know what I'm saying? I'll be looking at these other young men on Al Gore's internet, and I pop into their live stream to see what they doing. They be having thousands of people listening to what they saying, and these jokers be I saw a live stream the other day. Well, I didn't see it. I saw a YouTube recording of a Instagram live stream that somebody had did, and the little piece of the YouTube recording that I had watched, I could see that in the live stream, it was a young man from Atlanta named Aristotle. He was standing in his kitchen, just had on some basketball shorts, no shirt, standing in his kitchen, cutting his hair. And he was just talking, and it was like thousands of people watching. See, he just standing in the kitchen, cutting his hair. And from the clip that I listened for about 5 minutes maybe, and I guess he was venting. He was venting because I guess back in the day, Wall Street Trapper was hating on him behind the scenes, but like on camera, when he get on the show, he would like say stuff like, "Hey, we need to get together, King. You need to do," but behind the scenes, he was like kind of being street, like, I could come get you. That's what the young man was saying. You know what I'm saying? And the young man from Atlanta and Trap stay in Atlanta now. Trap from Louisiana. And you know what I'm saying? So the young man, like, man, I ain't that's some, you know, but that's what I can get out to 5 minutes. But thousands of people watching this guy who usually do trading videos, but he's watching his live stream while he cut his hair. He ain't talking nothing about the charts. He just it air. I have never, I have never seen a live stream when he's talking about the charts. Like I know who Aristotle is. I know he has like a following for trading, but every time I've ever seen him on a live stream, it was at night. I've never seen, and I'm like, you got a cult following like this where people just want to hear you talk about anything. You just sitting out eating dinner with your wife in your car. They in their car eating it on live stream, and thousands of people are watching. That ain't my story. That ain't my. First of all, if I'm just sitting in the car with my wife eating dinner, I'm not gonna be on live stream, right? That might be the 53-year-old man in me. I'm not gonna be on live stream if I'm just sitting in the car with my wife eating dinner. All right. Now, because if I'm out and I do a pop, like, because I've done a pop up while me and my family was out. I've done pop ups before, but I'm talking about the stock market, right? I'm not, you know what I'm saying? I'm not vlogging and putting my family all in it. And you know what I'm saying? You need to do that tomorrow. Secret sauce. Cut your hair with boxes in the kitchen. Not of your life. What's going on, honey? How that grandbaby doing?
Hey,
What's up?
Tim, all is well. Thank you for asking.
That's what's up. What's up, Venus? What's going on, Yolanda? Uh-oh.
How you doing?
The Yolanda tag that's on there right now, y'all be warned. That is the Yolanda tag that be coming unmuted and you be hearing her cussing out people at the soccer field. It ain't soccer season, is it?
Cut it out. It's soccer season started this week.
It ain't soccer season, is it? That is when I look over there and I see Shonister. When I look and see Shonister, hey. Y'all, you've been warned. You've been warned. Hey, man, I'm going to stop running my mouth. I'm going to share my screen. There's a link pinned to the top of the chat. If Price did something today that you did not expect, if Price did something that kind of caught you off guard, and a lot of toxic stuff going on in the Black financial space. It's been like that for a very long time. It's been like that for a very long time. Some of it crept over into my platform, right? Throwback gang, remember. The Throwback gang gonna remember this. It was Father's Day weekend 2021. Me and my family was on we was on vacation at Great Wolf Lodge here in Georgia. It's not too far from where I stay. Great Wolf Lodge is not too far from where I stay. It's not as far as Atlanta. It's close to a city called LaGrange. I think it's either in LaGrange or very close to LaGrange, right? And some of that toxicity crept over into my platform, right? And it's been going on for a while. It's back in the day, the old heads that I grew up around, they called it the bucket of crabs complex. That's what they called it, the bucket of crab complex. If you don't understand the bucket of crabs complex, ask one of your OG uncles or aunties to explain the bucket of crabs complex for you. All right. Today was CPI day. Today was CPI, right? Today was CPI. Okay. Who remembers what I said? CPI class participation time. There is a link pinned to the top of the chat in YouTube. Where did I go? I had disappeared for a second. Oh, you know what? I think I disappeared when somebody. Let me see something. Let me see something. Somebody say something. Let me see if I disappear. Somebody say something. Somebody with a good phone say something. Yeah, I think that's what it was. I think I had it mute, so I couldn't hear. All right. All right. Say something again.
Something?
Yep, that's what it is. So when somebody talked, I was looking at the YouTube channel. So when somebody talked, I disappear. I can't see myself in the corner no more. Like I disappear out of the corner. Like y'all don't show up because I'm sharing my screen, but it makes me disappear out of the corner when y'all talk. But if I wasn't sharing my screen, then y'all name would pop up on the screen. But I was just looking at the screen and I disappeared. And I think somebody had unmuted and said something. I was like, hey, why did I disappear? I thought it was a glitch. But wait a minute. I was talking about class participation time. I was saying that there's a link pinned to the top of the chat in YouTube, right? Do me a favor. Click on that link and come on over here inside of Zoom. We're about to have some class participation. I don't know how long it's going to last. It might be quick. It might just be one question. Then I move on, right? But the class participation, it just happens to how when I'm looking at the chart, if I think of a question that will require you to utilize your noodleage to think about why price is doing what price is doing, right? I'll ask a question because we look for the same things every day, right? Do they unfold every day? No, they don't unfold every day. Well, should I say, do all of the concepts unfold every day? No, all of them don't. Right. But if you have a plethora of tools to reach for in your back utility belt, right? You can engage with price. That's why Michael says he has 81 PD arrays. People be like, oh, he don't have 81. I'm pretty sure he got more than 81 ways to engage with the market. The man been doing it for over 30 years. Now, I see a few more people. Oh, somebody just left. Oh no, somebody just came in. I see a few more people came into Zoom. So I'm not gonna put YouTube on the countdown today. Right? I see some more people popped in. Now, who recalls what I said about CPI yesterday? I said that CPI will typically do what at the 8:30 drop. At the 8:30 news embargo lift time, CPI will typically do what? What did I say?
Take out both sides.
Take out both. Oh man, I ain't got my thing open. God dog it. I sure wish my community loved me so much that they had got me a soundboard that I could sit on my desk, and when I want to say something, I could just reach over and hit a button and go. All right. But I don't. They don't love me like Wall Street Trapper group love him. Can y'all hear the sounds? Am I sharing?
Nope.
I'm not sharing my sound. Okay, hold on. I'm not sharing my sound. All right. Now I was saying, well, I could just if I had a soundboard sitting here, I could just reach over on my desk and go with my finger right there. But since I can't, I just go inside Discord, and when light skinned Deborah answer, cause RN Deborah don't be answering, she be acting bougie. But when light skinned Deborah answer, I can say, "Let's go, man." We said that it typically takes out both sides, right? And if we look right here, that right there is the 8:30 candle, right? That candle right there is the 8:30 candle. What do we notice about that 8:30 candle? Someone tell what do we notice about that 8:30 candle? Hmm? 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 Nobody? It's got to do with what we just what Deborah just
Well,
said.
I ain't want to be the only one answering.
Doesn't have a down wick.
It doesn't have a down wick. It doesn't have. And if it doesn't have a down wick, what does that mean? If there's no down wick or if there's no up wick on a candle, what does that mean?
Wow, is it
I'm
strong
fun to
in
hang
that
up on the
direction?
Zoom. I'm fun
Please
to hang up
do.
on the Zoom.
Is it strong in that direction? Maybe.
It yes, strong in that, not just strong in that direction, but what about that direction? Because it can be strong, it can be weak, whatever, but what about that direction?
Uh,
It,
algorithmic,
mm-mm.
intentional.
No, stop trying to think deep. You know what I'm saying?
Oh,
Like I said, it don't have to be strong. It could be like just a very small little move. But if you don't have a top wick or if you don't have a bottom wick, what does that mean? Price did what? What about that direction? Deborah, don't say nothing else. Somebody else needs to start. Y'all hurting my feelings. Y'all hurt my feeling. I feel like y'all like, you know what? Tim gonna hang up on YouTube, so I'm just gonna go get in the Zoom because he ain't gonna hang up on the Zoom. So I'm just gonna go over there and be quiet and not talk.
There was no manipulation.
You already answered, Jim.
There was no manipulation. Price just expanded and took off.
Price just expanded. How? What about it's about the direction. What about the direction?
You talking about it continued its bullish trend?
Stop thinking deep.
Okay.
Y'all try to think too deep. If there's no manipulations, y'all thinking too, y'all going too deep in the well, right? Y'all going too deep in the well. Like if it, you know what I'm saying? Okay, so
What say what we noticed by the count is up close bullish candle. It set a new high. It swept to the liquidity on that side.
price, see that y'all always try to go deep to the depths of Hades, right? Right? Price, right? Yeah, okay, so let's go back to the basics, right? Right, with the four pillars, right? With an up close candle, right? Where's the open at on an up close candle? Where's the
at the
open
bottom,
at the bottom of what?
the candle.
At the bottom of what?
Uh-oh.
It start with a
Bottom of the
B.
body.
Bottom of the body.
At the body. I'm sorry.
All right, bottom of the body, because this is a candle too, and that's the bottom, right? At the bottom of the body. All right. Where's the Close.
At the top of the body,
All right. Where's the high?
at the top of the wick.
And where's the low?
In this case, it would be the
At the close?
bottom of the
Yeah,
body, right?
Yeah. In this case,
Yeah.
is at the bottom of the body.
Right?
Okay. So knowing that, right? What do we notice about this candle in reference to the direction? Price did what?
It's a strong up move because it didn't have a rejection at the bottom of that candle.
Boy,
It never
y'all
went.
be trying to go to the depths. It's a strong up
So you
move
understand
with
it
no
rallied up?
manipulation. Y'all try. Okay. What did? All right.
Never went down, so there was no
It
rejection at the
never
bottom.
went down. It never went down. It only went up. Right? That's all I was saying. What do we notice about that candle? It only went up. Right? I said, what about the direction? Because Deborah said it was a strong direction. He said it was a strong direction. Something. I was like, what about the direction? Right? It only went up. The price only went in one direction. Right? Price only went in one direction. Now, and the reason why I said that is because we started out by saying that during CPI, the algorithm would typically take out both sides of the market, right? And I said, what do we notice about this candle, right? Right? What do we notice about this candle? It only went in one direction. So that means it only, now, another answer I would have took from the beginning is, who can think of another answer that I would have took based off of thinking deeply when we started out by saying price typically takes out both sides of the market during CPI. What do we notice about this CPI print? Price did what? It only what? It only what?
You only went in one direction.
It
It
only
only offered the buy side.
it only took out buy side. It only took out buy side. That would have been fine, right? It only went up. It only took out buy side. It never went down. Like I think that was Lorraine that said it never went down, because we started out saying CPI usually will take out both sides, right? It'll go whap whap very quick. But if we see here, there's no bottom wick at all on this 830 candle. It only went up. Okay. Right. So, Tim, why did you take the long way around to say that? All right. Because what do we want to see happen prior to looking for an entry?
It should take out the sell side.
Yes, in a bullish case, you want to see it take out sell side before looking for an entry. All right. When we got our CPI print, right, we had no, let's back up. This is where Picasso lives. How long have we been talking about this right here? This monthly high. We've been talking about that for a while, ever since the first of the month. Since the first of the month, we've been talking about this right here as being a draw on liquidity for a plethora of reasons that we already talked about, and we're not going to recap here. All right. So this is the draw. All right. Since that's the draw, right, and we're looking for reasons to buy into that high right there, right, we will want to see some sell side manipulation before looking for an entry. Okay. when the CPI print came out, right? This is, I'm just going to go put it out there. In the mind of little Timmy Rogers, CPI is the king of manual market manipulation. CPI, FOMC, and non-farm payroll. Those are the big three, right? They are going to rip, right? They're going to rip. Sometimes they rip a whole lot further than other times, but they always rip. CPI did not manipulate any sell side today, right? Remember, I said it's typically take out both sides. You know what I'm saying? You don't know what's happening because it done took out buy side, sell side. You don't know what's going on. Today, pow! Took off straight up in one direction, right? At that moment in time, who can tell me what signature was my mind focused on at that time when CPI took off to the buy side without taking out any sell side?
Yep, the wig snatcher.
The wig snatcher. The wig snatcher. Do anybody care to try to elaborate on why the wig snatcher is the first thing that came to my mind? This right here is an essay question. Why did the wig snatcher pop to my mind when I saw that the algorithm only took out buy side liquidity when we're bullish? Go. You know who I ain't heard say nothing? I ain't hear Joe say nothing. Joe Toomer. I ain't hear Joe say nothing. Go, Joe.
Tim, there's a reason for that, brother.
Why?
Because I have no idea on this one, to be honest with you.
I applaud your honesty. We're gonna walk through it, Joe. You ready to walk through it with me?
Yes, sir. Let me while you talking, I'm gonna be getting onto a larger screen. But yeah, let's walk, please. That's what I'm here for.
Yeah, let's get on a larger screen there. We're gonna walk through this with Joe. Let me know when you're ready, Joe.
All right. Go ahead and talk amongst yourselves while I'm
Y'all, who else don't understand? Who else don't understand? Y'all get your note taking stuff out. See, this is what I like right here. I like the interaction. You know what I'm saying? Now, if I wouldn't have said, Joe, I ain't hear you say nothing, Joe wouldn't have never said, Tim, I don't know what in the world going on right now, and I need some extra help. You see what I'm saying? You see how God works. Yeah. I think I just see something. Who typing something in the chat? Y'all know I don't be looking at the chat. I just saw something red pop up there. That's hit, learn, and share. Oh, that's hit, learn, and share. Hit, learn, and share. Get out. Get out of the chat. Been answering. Hey, where light skinned Deborah went? Oh, there she goes.
I'm right here talking.
The screen moved, so it's like you had went behind something. I couldn't see the
You didn't read my comment.
It's a love this.
Yes.
Give me some attention, Sherwin. Tim not paying me attention, Sherwin. All right, you ready, Joe? Oh man, Joe done switched over to the Android phone, man. What Joe got going on? Joe, y'all heard Joe? Joe said,
Hold on, man. Hold on, bro.
Take your time, Joe. I ain't got nothing to do. And y'all already know. I don't care about how people feel about, oh, he's taking too long or he plays too much. I get off my life. This ain't paying my bills. I'm doing a public service. I'm not
I'm not one of them philanthropists that's all nice. You know what I'm saying? I come from Fort Lauderdale, Florida, man. I spent most of my life in Parkway with all that soft skin. Well, look at here. Man, my homeboys I grew up with, they taught me real early. You got to have tough skin. The old heads, all the old heads, like all the old heads like Pat and Aunt and all them, they taught you real early. You had to have tough skin. You had to have tough skin. You can't be riding up trying to be soft. You know how many days I got ran in the house getting cracked on, and my daddy said, "Yo, get your we running up in here up under your mama's skirt just because they talking about you." Like you get it from your friends, and then you get it from your daddy when you get in the house. What? Y'all better stop. Hey, better get some tough skin on little Timmy Rogers live stream. Joe, you went to Walmart to buy a new TV? Where Joe at?
I did it the whole time, man. I'm ready.
Oh, you ready? Oh, see, you was on the Android. I couldn't hear you, man. You was who FaceTiming me? Who FaceTiming me? Oh, that's my homeboy Squirt FaceTiming me. Y'all, hold on. He was FaceTiming me from his MacBook. Let me tell him we on live. I'm sorry, y'all. Now this one on me. I can't blame Joe for this. I can't blame Joe. What's a cheap Android? What's a cheap Android phone? A Samsung Note. A Samsung Note 1.
I went out for a while. I heard you talking about cracking. You were cracking on me while I was gone?
Yes, sir. I'll talk about you and your cheap Samsung Note 1 that you on.
Oh man, hey, as long as I get the lesson, I'm good.
Y'all heard that?
All right.
I'm good. All right, man. Okay, so Joe and everybody else who don't understand, right? Do you know? Have you heard of because the Wig Snatcher is a name that Here to Learn and Share gave my favorite algorithmic signature. Do you know what the Wig Snatcher is? Did we lose Joe? Did we lose? I only see one Joe.
I'm on mute. I was again. I was on mute again. I said,
oh my God. We I can't hear nothing you said, Joe. So I'm just gonna go for the beginning, right? So in case you don't know what the Wig Snatcher is, right? The Wig Snatcher is my favorite signature that I like to see. It didn't really have Michael never gave it a name, but it was named the Wig Snatcher because it punishes everybody before making a move. It punishes both sides of the market before making a move. So what the Wig Snatcher is, right? Whatever your draw on liquidity is, in this case, it's the buy side, right? You will see price take out buy side first, right? Take out buy side first, and it's going in the direction you want it to go. It'll quickly reverse, take out sell side, right? And then it'll turn back around and give the real move going toward the buy side, giving you an opportunity to participate. That's the signature, right? So go in the direction you want to see first, right? Reverse, right? And then reverse again. And then that's when you participate with it, right? So bearish, you just flip it around, right? Sell side first, then buy side, then take off to the sell side. All right. That's the Wig Snatcher. Okay. With CPI typically takes out both sides of the market, right? So let's knock some of these candles off,
right? We're gonna knock some of these candles off here, right? Let's go down to the 115-minute candle. Then we're gonna drop down to the 1 minute chart. Okay. So this is the 1 minute chart here. And as you see, this right here is the 8:30 candle, right? Now, you say, Tim, you was looking at a 15-minute candle. It don't matter. A candle is a candle, right? Because in 15 minutes, if this is 8:30, right? If there's no bottom wick on this 15-minute candle, there's no bottom wick on the 8:30 1 minute candle, right? Because this candle starts at 8:30, right? So the very first candle in this 15-minute candle, since there's no bottom wick on this 15-minute candle, there's not going to be a bottom wick on that 1 minute candle. So the CPI print never took out both sides of the market, right? Because all it did was go straight up for 15 minutes, right? I ain't gonna say straight up, but it never went lower than it ever opened at 8:30. All right. So looking at this here, right? As you see here, right? As we see here, this is the 8:30. Let me do this right here. This is the 8:30 open. Let me move all. No, I'll leave it on there. Let me see what I want to get out of the way, because I don't want too much stuff to be just cluttering up the chart. Let's hide the weekly high, because I don't want too much stuff just cluttering up the chart. Don't need any of these new day opening gaps. That's just lipstick. All right. Okay. That's good enough. All right. So looking at, this is the 8:30 open right here. Okay. 8:30 open. Now, when the CPI, let's do this right here. We're going in. We don't, CPI ain't dropped yet. All right. CPI hasn't dropped yet. Now, coming into the CPI print, okay, this is the current buy side. All right. You follow me, Joe?
Yep.
All right. This right here is the low, right, of the current dealing range. All right. That's the low of the current dealing range. All right. And this right here is internal sell side liquidity. Okay. Coming into, right, where we at now. Looking at what price is, this is, right, the midnight open. This is the start of the new day. Okay. Where's 6? All right. This right here. Let me put some lines over here so I can know where the days are. All right. All right. All right. I'm doing that so I can see where the time is. All right. Okay. So looking at price, going into CPI, this is pretty much typical price action, right? Because we're just engineering liquidity. We're not really trying to trade outside of this overall range right here. Okay. So, right, you see over here at 6 p.m., right? We're just engineering liquidity. Okay. Then we come into a new day, right? We come into a new day and we come up here, take out buy side, right? And then we immediately drop down, take out sell side. So we wipe out the buy side and the sell side from the Asian session as we coming into the new day. All right. So once we wipe out the buy side and the sell side, right, during the Asian session coming into the new day, right, we make a lower low, right, and then we rally back up and we create relative equal highs up there. Okay. So at this point in time here, even though we're inside some consolidation, the algorithm is already tipping its hand, right? Because if you notice, right, we're bullish overall because our draw is up here, right? Our draw is up there. That's where Picasso lives. And coming into a new day, we go in the direction that we want to go. We immediately reverse, right? And we take out the buy side and we immediately reverse, take out the sell side, right? So, and we're bullish. We're not looking at this as a bearish Judas swing. We're anticipating this to be a wig snatcher because we're bullish, right? So we come back up, right? We set a low and then we come up and get a break in market structure right there. Okay. So now the algorithm has gave you set up a wig snatcher here and giving you a bullish break in market structure there. Right now, when we got a bullish break in market structure, right, we have not taken out any buy side liquidity yet. Right. When I said we came up and made relative equal highs, right? So you got a bullish break in market structure and you did not take out buy side liquidity. Okay. Now we always preach, if you haven't taken liquidity, do not try to force a retracement. If you're going to trade against the grain, right, take base hits to relatively safe levels of liquidity. Don't try to force a reversal, right? I say retracement, but don't try to force a reversal because you haven't taken the liquidity yet. No liquidity has been taken and you got a break in market structure. Okay. So at this point here, when we set these relative equal highs, right, we don't take out the buy side liquidity, right? That means this low right here should be protected, right? That means that low there should be protected. Why is that? Because now that we've come up here and now that price has done this, right, we have just made that a very important level, right? We just made that a very important level, right? That's an intermediate term low. We got our little smiley face man down there, right? So that low right there should not be taken, right? If we haven't taken any buy side liquidity, right? Or unless we just in seek and destroy, right? Now that we see that all of that, you got that whole narrative there, right? And we come over here, right? Engineer relative equal highs. We drop down, don't take out the low, right? Right. We push up here, drop down, push up there, drop down, don't take out that low. Why not? Because that low is being protected, because that low is being protected. All right. So not taking out that low, then we take off and then we set this low here, then we take off and take out that buy side liquidity that we engineered, right? Once we take out that buy side liquidity that we engineered, now the market is telling us, I want to continue that direction, but not just yet, right? Because when we went through it, we started to retrace back in, right? We got a little bit of distributing going on here. We got accumulation, manipulation, distributing. We offsetting some positions there because we're starting to pull back once we went above those highs. Okay. So now we got all of that. We said price said, I want to go that way, but not just quite yet. Okay. So then We come over here and we getting ready to come into 8:30. It's 8:29, and we sitting there and we are thinking to ourselves. Now we went through all of that, right? And we say, hey, we're bullish, right? We're above the midnight open, right? This low right here did not take out that low there, because that low didn't take out that low over there. So if this low didn't take out that low, right, I really don't want to see this low taken because of what we said about all of this over here, right? And now we've come back to the engineered buy side liquidity. I deleted my line. Did I delete my line? All right, we came back to the engineered buy side liquidity. And so now when the CPI print is released, right, where is their buy side and sell side that can be manipulated, right? We got buy side and we got sell side that is perfectly willing or perfectly just out there for the algorithm to take, and it's within the allowance, right? It's within the allowance of sticking to the buy program, right? So when the CPI prints, right, I would prefer to see it take out these relative equal lows, right? Go as far as it need to go, but don't take this low. And then rip back up and take out that high, right? That's
Hey,
what
Tim,
yes, go ahead.
explain again why you wouldn't want to see it take that low.
This low right here?
Yes.
Okay. Because over here, right, we got our institutional market structure showing us that we're going to go up, right, towards our draw. Okay. And when we came here, we engineered buy side liquidity. Okay. We engineered buy side liquidity here, right? And then once we engineered that buy side liquidity, we came down, took out the sell side, right? Once we took out the sell side, once we go back and engage that buy side, this right here, right? That right there, that's not the terminus. The terminus is going to be higher than that, because when we set this high and then we engineered that liquidity, we're preparing more liquidity so that it can go farther. You see, because the target is here, right? So since we engineered the liquidity and we came here and took out the sell side, the damage has been done down here. And the only thing below this is the low that is to stay protected. So that's why we don't want to see that low taken, right? Now, Phil can press the button and actually take this low, right? But this is the low that's the last line of defense, and you do not want to see that taken at all. But healthy algorithmic price action would be to leave this low intact, even with the manual manipulation. You see what I'm saying? To leave that low intact because the target is up there. So that's why you don't want to see that low taken, because the damage has been done, right? Because if you see here, we came all the way, all of this has been repriced. All of this sell side liquidity has been taken, right? So there's nothing below this low except for the sell side liquidity that don't need to be taken, right? And smart money is showing you that, okay, we've stepped in the building and we're ready to go up, right? So coming back below this low is digging back into what smart money don't, because smart money put some on here. Smart money put some on here. Why are they putting it on? Because they trading below lows, right? You go below the lows, you're putting something on. You go below the lows, you're putting something on. And how can you tell if smart money putting something on below the lows? Because you're going to get a bullish order block. When you go below the lows, you're going to see displacement. right? See how we drop below these lows, price displaced up, right? When we drop below these lows here, price displaced up, right? You're looking at these bullish order blocks right there, right? Whenever you, and going the other way too, if you go above a high and then you see some displacement like coming back down, that's smart money putting on shorts. You know what I'm saying? In a sale program, like in a sale program, smart money putting on shorts, right? In a sale program, in a buy program, right? They're you know what I'm saying, taking some off. You know what I'm saying? They go above a high, they taking some off. You know, they take, you know, taking a little bit off, right? To manipulate it back down so they can get back down to where they want to go. You see what I'm saying? Take some off. But that's how it operates. That's how it moves. That's why you don't want to see that taken, because the smart money is in a full-fledged buy program right now, and they're not going to keep taking lows in a buy program. You know what I'm saying?
Right.
The lows are going to start to be protected, because if they take lows, right, if they keep taking lows, the individuals that are trying to short, right, they're going to, their targets are going to get met. You see what I'm saying? So they're not going to keep taking out the lows. They're because they're trapping the breakout traders. You know what I'm saying? They're trapping them once they drop down. Somebody trying to break out below this right here, right? Once it come back up, now they're getting stopped out, right? So they're not going to keep pushing it down, because eventually the breakout traders are going to start making money. All right. So that's why you don't want to see that low taken, because the damage has been done. Okay. Now at 8:30, right, when the CPI prints, let's go back up and put that 15-minute candle back on. All right. All right. Now let's go back to 1 minute. Right. So at 8:30, right, what do we say? We said that CPI typically takes out both sides, right? CPI did not take any sell side at all. It took off and only took out buy side, right? So since CPI took off and only took out buy side, right, the first thing that I'm thinking is wig snatcher, right? Why am I thinking wig snatcher? Because it took off, and where did it go? Right? It went up to the daily high, but it did not take out the target, right? And since it did not take out the target, what did it do? We can't even, I got to go up to a 60-minute chart. What did it do, right? It engineered buy side liquidity, relative equal highs. All right. So we go up, we don't take out the target, we engineer buy side liquidity, right? And now during this blast off right here, right, at 8:30, during this blast off right there, right, smart money, right, smart money during, oh, let me ask this real quick while I do this right here. What's the most important aspect of ICT concepts? Anybody?
Time.
Time. Price.
Thank you. Time. What session, what session does the NASDAQ, Dow, and ES, what do they belong to? Is it like a US thing, an Asian thing, or or England thing? Instrument. They are what?
US.
US, right? So if they're US instruments, why isn't this? Am I tweaking? 9:30 to 12. Oh, I forgot it only show when the candles are actually there. All right, so let me just put the candles on. All right, let me put the candles on. because it only show when the candles are actually there. All right. It's a US thing, right? It's a US thing. So at this 8:30 news embargo, right? What time window does that fall in, right? This right here is your 9:30 open, right? What time does this fall in right here when the news embargo lifts, right?
New York kill zone.
Yeah, it's the kill zone, but in relations to the US market, right? What is this over here?
Pre-market.
Pre-market, right? So during pre-market, who's not getting an opportunity to participate in this move right here?
Retail traders. Us.
Everybody, retail, smart
Everybody.
money, everybody is not, because this is pre-market, right? This is pre-market. So with this news move here, right? It took off, only took out one side, didn't take out any sell side, right? Right. Nobody in the New York session had an opportunity to participate in this move up here. Okay. So we haven't taken out any sell side, right? So when the market opens, right? So right now at this, like I said, at this point here at 8:30, with that move there, the first thing come to my mind is wig snatcher. All right. First thing come to my mind is wig snatcher. So when we I was trying to see if Felicia was in here. I don't see Felicia. I don't know. Is Felicia on YouTube? I don't see Felicia on YouTube. I just wonder, because I know Felicia is in Tremaine's community too. And I had put something in the chat on Tremaine's community about a turtle soup that I had took. But anyway, I'll talk about that when I get to it. Okay, so where was I? Oh, before the CPI print was released, right? Where's the sell side that we said was allowable? Right here, right? This takeoff up there does not negate the fact that this sell side is allowed to be taken. Okay. Now, will it happen every single time? No, but you always want to remember this is what you analyzed prior to any institutional sponsorship, any type of move, any type of anything, right? So we get this blast off, set relative equal highs, right? And then when we come into the 9:30 open, right? Price takes off and pokes his head up above a prior day's high, right? Pokes above a prior day's high. You say, Tim, we already traded above that prior day's high, right? But when do we trade above that prior day's high? We traded above that prior day's high before the 9:30 session open. And we still have not taken out any sell side liquidity, right? Ever since here, we haven't taken out any sell side liquidity. Okay. So when the 9:30 opens, right? Yep, the 9:30 open, we get a quick little move down, right? And then we go up, and then we take out that high right there. Well, Tim, we manipulated out sell side, and then we started going up. You're right. But what did we say before the news print came off? This was the sell side we was looking for to be manipulated out before the news print printed. The news never manipulated out the lows, right? Does it have to? No, it doesn't. But if it doesn't manipulate the lows, right, it still don't negate the fact that these lows are fair game in the overall sense of the move. All right. So when we come up here, poke above that high right there, this right here, I typed in the chat. I said I took a turtle soup short off of the prior day's high. And then FC, she posted in the chat. She was like, Tim, I took that same trade on the ES. And why is that? Right? The 8:30 news embargo only went straight up. It never manipulated out any sell side. Now, me, I'm not greedy. I wasn't trying to trade back down to, like, people like to call it data lows. I hear people talk about data lows all the time. I wasn't trying to trade back down to the data low, right? I just took my turtle soup and then I came back down to the it's I think a 5-minute fair value gap on the 9:30 candle, right? Let's see. Yes, right there. Right there. That 9:30 candle there, back there to that fair value gap. That's all that's what I took there. Turtle soup above yesterday's high down to that 9:30 candle. Right now, back to what I was saying. Okay. So now that we come up here and we come down, get our break in market structure right there, right? What does it do? It comes back here, drops down below that low we was talking about. So now, mind you, now watch this right here. This is the wig snatcher we was looking for, right? Take out the buy side, take out the sell side, right? Remember, that was our buy side, that was our sell side we willing to take, right? Take out the buy side, take out the sell side. That was the wig snatcher we was looking to play out there. So when price comes back up here, right? Come back up, we came back up to the bearish order block, traded back down, deep retracement, but respecting the fair value gap, right? Deep retracement, respecting the fair value gap. If that right there ain't enough for you, once you get your break in market structure, trade back into the fair value gap, there's an entry for you there. All right. Then it rides back off into the sunset. Now, watch this right here. Remember, we said that right there is our wig snatcher. Remember at 9:30 when I said we made a quick drop down, right? Guess what that quick drop down was? That was the wig snatcher to go back and get that sell side. Drop down in the direction of the sell side, rallied back up, took out all this buy side, engineered more buy side, came down. If you're not, brave enough to take it there, right? After that breaking market structure there, once you drop down below that breaking market structure, giving you a true wig snatcher, retrace back up, drop down into the sell side, right? This stuff happens over and over and over. So to give us the wig snatcher that we was looking for, it gave us a bearish wig snatcher to fulfill that, right? Just like how when we're looking for a market maker buy model to play out, it gives us a market maker sell model first. Niche consolidation, right? Smart money reversal, low risk short, terminus, right? Then we a niche consolidation there, smart money reversal, boom, right? It happens over and over and over and over and over. Make sense, Joe? Did I lose you anywhere, Joe?
No, I got you on the wig snatcher pattern. Kind of internally, and I do understand when you're saying breaking market structures, but you were moving your fancy dancy pretty quickly. Can you show me again, just so I think I see where they are, but can you show me kind of in that second bearish wick snatcher move, kind of where you were saying those breaks in market structure?
Okay, so here, right, we drop down there,
Yep.
right, taking out the sell side.
Mhm.
Okay, then we rally back up, right, taking out the buy side, right, that right there, that's a bullish break in market structure because this high
Yep.
took out that low,
Mhm.
right? So that's a bullish break in market structure right there.
Yep.
And then once we got up here, right, and then took out that buy side, when we dropped
Yep.
back down here, that gave us a
Mhm.
bearish break in market structure there because
Got
this
it.
low
Yeah.
took out that high, right? So when we trade back down below it, that's a bearish break in market structure there. So, and you say, if you say, okay, I don't really trust that short right there because we're bullish, right? You know, okay, we just engineered liquidity. I don't trust this short. When you drop here, that's another break in market structure there because this low came up and took out that high,
Mhm.
right? And
Yep.
so as you're dropping back down, that's another bearish break in market structure there. And then we trade back up into the bearish breaker, into the fair value gap, then drop just like we trade back up here into the bearish breaker, into the fair value gap, and drop, right? And
At,
so then when
at,
we
at,
go ahead.
go ahead. Go ahead. No, you go ahead, Tim.
Go ahead.
At any point during this price leg here, would you use your fib tool to confirm anything or as your primary indicator or no?
For this right here, I don't need the fib tool because I got the targets right there. I see the targets, right?
Okay.
I see the targets. Like I understand that, okay, this right here is the internal low that I wanted taken, right? Because this right here, right, that was the where I want to see it manipulated, right? But once it
Mhm.
took off like that right there, now you're showing me that this right here is my initial consolidation, right? So if I come back down, right, that's going to complete this market maker sell model. So I have my target. The only time I will pull out my fibs, right? So I
Mhm.
will pull out my fibs where, okay, this is our target right here, right? That's our target. And we look over here, there's nothing to look for because we're at all-time highs, right?
Mhm.
So I can come to, right, my current structure, right, and look for my little guy, right? And when I find my little guy, I come down there to the lowest low and go back to the high, and then I project up bullishly in this case, and then I pull up my fib to say how far can we go, right? And then we see here from there, right now we're at just above 2 standard deviations, right? I go there to see how far can I go from my little man, how far can I go past this, right? Because I don't have anything to look for over there, right? I ain't got nothing to look for over there. Or let's just say if it's like I'm really low, we had a really deep retracement, right? Let me see if I can find something with a super deep retracement. If we had something with a really deep retracement, I don't see anything, but we'll just go here, right? We'll come here, okay, and we're just gonna say this is a really deep retracement, right? And we're looking at all these highs inside here, right? Right, we got us a really deep retracement. So we come over here. He's kind of ugly, but that's our lowest low there. Come back to the high because we gotta swing low over here. We gotta swing low over here. Gotta swing low over here. He looking like Picasso, right? He looking like Picasso. We're going to our lowest low, back to our swing high, and then we look at and say, okay, now we can target, right? We got 3 standard deviations here back to the day, right? So if I say this is my target I want to see, right? I'm shooting for, instead of shooting for 23,804.50 as my target, right? I'm going to go for this deviation right here, which is 23,824 even. That's my target there, because that's the standard deviation that's pretty much in line with this, but above it, right? If to be safe, you can go with the standard deviation that's just below it. That's the 2.5, right? That's just below it if you want to be safe, right? Then you can say, you can use it to say, okay, where do I want to peel stuff off? You got one standard deviation here, right? So you might want to take something off there because we're going above those highs, right? And then you got two standard deviations here. You're coming above that high. You look for the highs that your deviations are lining up with to see, where do I want to peel off? Where do I want to target? When you're deep, deep, deep in a retracement, you can use this to say, okay, this makes sense to peel off. You say, okay, we tend to retrace some at 2.5, or we tend to retrace some at 1.5. So I want to take a little something off. When we get to the 1.5, right? I want to take a little something off at that high right there, or at one standard deviation, I'm gonna peel a little bit off at this one standard deviation or at that high. You can use it like that if you deep in a retracement. But if you're not deep in a retracement and we're, you know what I'm saying, we're at all-time highs, right? You use your manipulation leg, right, to figure out how far above the target you can go. But inside here, I wouldn't pull out no fib tool for inside here, because the price structure is giving me my targets, right? Like I said, I took a turtle suit back to a fair value gap, right? I could have taken it back to the low. I could have tried to hold it for way down here, but I trade with prop firms. So I got to, you know what I'm saying? I got to manage how much I make every day, you know what I'm saying? Because of consistency.
Gotcha.
Yep. Anybody else got anything? Got anything else, Joe?
Not yet.
Say it one more time.
Not yet.
Oh, okay. All right. Yeah. Cheap cell phone family. That hey man, Joe gave us our price action recap, man. We got an opportunity to sit there and look at it. You know what I'm saying? But like I say, this stuff works. It happens time and time again. It don't, you know what I'm saying? It's like I always say, you can't look for everything everywhere, but when you know when to look for it, dealing with time and price, it's going to be there. All right. It's going to be there. When we opened up this month, right? When we opened up this month, we said that healthy price action would be for us to come take out this monthly high, because we was going into a bearish time of the year, right? What do you want to see before you start making a bearish move? You want to see a manipulation of buy side liquidity, right? Where's the buy side liquidity? Above the monthly high, right? Why is it above the monthly high? Because we're at all-time highs. We're getting ready to go into a bearish season. And if you're going into a bearish season, you want to take out the highest level of liquidity, right? And at this time, at all-time highs, we're taking out a yearly high, a monthly high, a yearly high, a quarterly high. We're taking out the highest time frame that you can take out, right? So it only makes sense for the algorithm to take that buy side liquidity. And plus, we never try to pick the top, right? We never try to pick the top. If the knows that everybody's anticipating the market to pull back. So what better thing to do than to bust short sellers in the head? And what better thing to do than to induce breakout traders that want to chase the longs? And how do you do that? By manipulating out the buy side, right? So way back on August 1st or September, July 31st, right? Okay. Number one, number two. Okay. Right. Way back here on, this is August 1st. This is August 1st right here. So when August 1st opened up, right? Well, before August 1st even opened up. Uh-oh. Right. This was priced right here. Right. This is priced right there. Now, when we drop down right here, right? What did that give us? Right. That drop right there. What did that give us right there? Who can see?
Relative equal lows,
Mm-mm.
internal liquidity.
Look at that.
I'm quitting it.
We traded, right? We traded below that right there.
Oh,
Breaking stuff.
A break in market structure.
okay.
That gave us a bearish break in market structure. Right. So we said this is the end of July. We're getting ready to go into a bearish season. We looked up the seasonality of August and September, right? August was like relatively flat, slightly to the bearish side. September was like over the last 5 years, on average, it was flat, slightly to the bearish side. And over the last 5 years, September was down like 5% or something like that. You know what I'm saying? Over the last 5 years. And so we said, okay, healthy price action would be to take this high out right there. All right. Now, mind you, we just got a bearish break in market structure. Why would I be talking about healthy price action would be to take that out right there? Mm-hmm. How do we start out the conversation? How do we start out? The first thing we started talking about, Deborah, why would we be looking for this right here? What's the first thing we started talking about?
Before, you said CPI generally takes out both sides.
When I kind of took off to the upside, first thing that came to my mind
was the wig snatcher.
Let's go. Let's go. We're going into a bearish season, right? And going into this bearish season, we get a bearish breaking market structure. So if we're going into the bearish season, right? We starting off going in the direction that the season is supposed to be. So if we get a bearish break in market structure, now I'm looking at this right here saying, oh, if I see the wig snatcher, I might be on the right side of the market. That's why we like healthy price action would be to take out that high, right? And then fast forward 12 days later, right? 12 days later, and how many trading days? Six trading days later, right? 6 trading days later, 1, 2, 3, 4, 5, 6, 7. 7 trading days later, right? And we've taken out that high. Okay. All right. So now to complete the wig snatcher, right? These daily candles, right? Coming back there. Right. That will complete your wig snatcher. Right. That will complete the wig snatcher there. Because we went up, took out that buy side that we was looking for. Right. So now the next step would be to come back, take out that for now, take out that low. Right. Why? Because that's the low right there. That's our bearish breaking market structure. Right now, if the algorithm builds in another low that takes out a high, then that could be an earlier breaking market structure before you get here. Just like before, when we was looking at the other one, I was like, if you're not comfortable with taking that breaking market structure there, once we get down below the other one, then that's your breaking market structure there. Same thing. Time and price is fractal. You just let the algorithm build out the thing. Doesn't that look just like the lower time frame when I was like, if you're not comfortable with that break in market structure, then once we get this one here, and then Joe was like, hey, can you go back? You was moving your fancy dance kind of fast. Can you show me them break in market structures? Same thing. Time and price is fractal, right? So we got a bearish break in market structure. Y'all be like, hey, Tim, I never already said that. Tim, why? How did you know that? Hey, Tim, how did you know this right here? The same way you know it. The same way when I come in here and ask y'all, you know what I'm saying? Hey, what's this? What's that? What's that? What's this? And then, you know, a week or two later, we have a post in the Discord that says the higher time frame drawn liquidity was just hit. Boom. Are you not entertained? Are you not entertained? Hey man, do anybody got anything else for me? Did y'all get anything out of this tonight?
Yeah,
Yes.
appreciate it.
All right. I'm gonna take my shirt off and I'm gonna cut my
Hey
hair
Tim,
off.
I got a question for you on this daily chart.
Okay, what's
on
up?
on this daily chart. All right, we got a high, a low, and then a higher. Would should I wait? All right.
Go ahead, OG. Go ahead, OG, man. You said you were kind of breaking up, but you said a high, a low. We'll say that again. I was just messing with you. Whenever somebody starts saying on this daily time frame, I always got to get my crystal ball out. But go ahead.
Okay.
Go.
Now I'm just saying you got the high, low, and a higher high right there, right?
Mm-hmm.
And so we wait to see.
So what you're trying to see if this is going to be a bullish breaker?
Well, no, but I'm trying to see. Like I said, I've been, and probably erroneously so, using this fib tool. Would I have to wait to see, or should you wait to see this another bullish break in market structure to the right of this high before you use the tool?
You said
In other words,
you said a bullish break in market structure up
a
here?
bearish, I'm sorry, bearish, down. Another bearish break in market structure before I would use the fib tool.
Okay, so let's just say price don't go no higher than this here, right? And then if we come down and just do something like this, then you would put the anchor the fib tube here and anchor it here, and then project down. Like you would come to this high, then you would take it to that low, and then project down, right? And you see here, like right now, one standard deviation comes below that low right there, right? 1.5, right, comes below there. Okay. And then 2, right? Let's go to a high time frame and put on some cheese and rice. All kind of stuff going on here. Brush. Go to our weekly. And let's turn on. Nope. It's daily. It's our inversion fair value gap right there that we had got above. Do we got anything else? Our bullish fair value gap there. Our monthly low there. Okay. So now looking at our weekly time frame, right? So looking at our weekly time frame here, we got, and that's just based off what's going on like now. If that was the highest we went there. Okay. So we coming down, right? A half a standard deviation will put us back at this inversion fair value gap right there, which is, you know what I'm saying, we taking out the monthly high, and then that will give us the monthly low, right? So we've taken out the monthly high, we've come back and taken out the monthly low. Then we've come down to an area of support just based off of that there. That could be an area that you're watching as you're coming down, right? And then with one standard deviation, that puts us back down into a weekly bullish order block right here, right? At one standard deviation, that puts us below some sell side liquidity right there. And that is also, let's say this is the highest, that's a wick, but we're just gonna say that's the highest close right there. And one standard deviation gives us a 10% correction, right? That's a 10% correction over time. So when you think about August ending flat, let's say August ending flat. So August started around here. So on average, if August ends flat, then we're just going to take where August opened, right? Well, where July closed, and then come down to there, right? And September is typically a little over 5%, and that's a 6% move back down there. So all of that kind of lines up with the seasonality just based off of us just throwing some imaginary lines on the chart right now, right? So those can be like areas that you watch, really watch how price start to react around here based off stuff that we've already looked at, right? We said we're looking for this to act as support because that's the first weekly SIBI that was created when we took off and broke market structure. So we're looking for price to come back down and be supported at that weekly SIBI right there. You know what I'm saying? And based off seasonality, all of that is lining up with what seasonality already told us from, you know what I'm saying, just using the fundamentals. You know what I'm saying? Using the fundamentals of like looking at historical and we had looked at the Qs, right? We looked at the Qs, right? And so 5% on average over the last 5 years, and then flat on average over the last 5 years, right? And then if we go to the average, right, we said flat, right? Because it's August gonna end flat. And then if we go to where July closed and go to 5%, that puts us inside that inversion fair value gap where we looking for price to be supported at. Right. But you will use your field tool once you get the institutional market structure. You're looking for the institutional market structure. You ain't just willy-nilly grabbing any low or high. You're looking for the institutional market structure where price gets to a I call it an anticipatory reactionary point, but price gets to a destination like an all-time high. Right. This is an anticipated area of resistance or whatever. You get to an all-time high. Once you get to that all-time high, then you form the institutional market structure. Right. I like to think of it as 3 swing lows or 3 swing highs that create a swing low or create a swing high. Meaning, right, you got like a swing low is a low with a higher low to either side of it. That's a swing low. Right. But when you have a swing low, right, with a swing low to the right and a swing low to the left and a swing low to the right, right? Michael calls that an intermediate term low, but that is what shows you that institutional market structure. That low is very important, right? Or that high is very important because now you got a swing low, a intermediate term low or intermediate term high that's being taken, right? And why is this right here an important spot, right? You got an intermediate term high or long-term high, because if you have an intermediate term high to either side, but just looking at this piece of price, right? Right. You got your little man there, right? You got an intermediate term high that's being taken, right? So now that you've taken that, right, that's a very important level that's been taken. Okay. Now you've taken that, you're in the premium, of a very large expansion move. So when you get right that swing high being made after taking that, right? Now you're looking how far can you go down, right? Tim, you're not making no sense. Okay, let's do it over here, right? You got that intermediate term high over here that you took coming over here, right? When you came up here and took it, you formed a high, you formed a high, you formed a high. Now you got your intermediate term high there after taking that one there, right? And once you take that, right, that's your anchor point, right? That's your anchor point. You bring it back to the swing low there, right? You come here. We came down. There's your 1.5 here. That's the one that's below, because this one is above that low. This one is below that low right there. That's your target, right? When we come down there to that 1.5, we reverse and we go back up, right? Well, we always say price typically consolidates or reverses at that 1.5 or that 2.5 or that 0.5. We anticipate stuff to happen there, right? It's not by accident that we come down to that 1.5. That's below that right there, right? It on a further thing is still some more lows over here that we came below. Like we look at like the continuous chart, there's stuff that we traded below down over there, but it is the same thing. We're taking out an important high. We form that institutional market structure there, come down, get a bearish break in market structure, trade back up into the imbalance, drop down, take out the sell side, right? And this is on weekly charts. Time and price is fractal. If you know where to anchor the tool, why you putting it there, then you can utilize the tool to help you engage with price intelligently.
All right, thank you.
Could you have used projections for possible targets above the all-time? Yes, that's what we had talked about. Projecting above the all-time highs when I was like, we was like at 2 standard deviations from that 1 point that we had used, right? But if let's drop down to 15-minute time frames, right? If we're looking at 15-minute time frames, right? So it just depends on where you're looking from, right? Like here we go here, we're right. This right here is down there in the what's the name there, your consolidation there. But I like to do it from the manipulation, right? This is our manipulation leg right here, right? We blast off. That's our manipulation leg. We're manipulating out below the low. Okay. So we have a swing low here, right? We're manipulating out these lows. And then we have a swing low over here, right? He's ugly, right? So if you're using the manipulation leg, right? You come from the low, go back to the prior high, right? And then you have 1 standard deviation right up there. You have a half a standard deviation there, right? So based off of that manipulation leg there, right? You have 1 standard deviation here, 1.5, 2.0, right? These are targets you can shoot for, right? There's your half a standard deviation. That one hit beautifully. We hung out there for a minute, got above it, used it as support, right? There's your 1 standard deviation there based off of that manipulation leg right there. Okay. If you're coming here from this, like you've been watching it from here, this manipulation leg here coming into midnight, right? When we said we dropped down, manipulated, God dog it. Right. We say we dropped down and manipulated, right? Got our lowest low, take it back to the high, right? Right now we're at 3.5 based off of that manipulation leg coming in after midnight. We're at 3.5 there, right? Back to the high was above the 2 standard deviations, right? Coming from here, right? This was our initial manipulation leg, low risk buy, right? Manipulated again, then went up there, right? The low risk buy was never touched. Smart money reversal, low risk buy, right? Take off, boom, hit the all-time high, right there. And then you go to the deviation above your high, right? And look how beautifully it went right to that 2.5, right? Right. The deviation above you. Let's zoom this in. This is beautiful. I love this. I love this, right? You see that right there, right? So this is our target. That's the deviation above the target there at 23,878 and 3/4, right? The high of that, the close of that candle right there come in at 23,875 and 3/4 to the exact tick. To the exact tick. Y'all see the numbers there, 23,878 and 3/4. If I go into the Fib tool and make the numbers bigger so that y'all can see it, so nobody don't think I'm swelling, that says 23,878 and 3/4 to the exact tick. I got 2.5 earlier, but I wasn't sure if this is right. It is, or if it, okay. Yeah. So that's how you would use it to project how far you can go above there. I thought we talked about that earlier, right? But if you're using the manipulation leg right after midnight, or if you're using the manipulation leg right after 9:30, right? Either one, right? I think the one after 9:30 was like a 0.5 was somewhere. Let's look at it. So if we go from here to there, yeah, the 0.5 is here, right there was the one above the high, right? So above this here, the 0.5 was the deviation above there, and we hit that at 12:45, and then the one come from here at the 0.2, the 0.2.5 was the one above there.
Don't be texting and driving. Don't be texting and driving. All right. Hey man, I feel like we've been cooking for the last couple weeks. I feel like we've been cooking. I don't think y'all need me no more. I don't think y'all need me to ever go live again.
I do, because I missed 2 days of it.
What them 2 days go? What them 2 days gonna do?
I don't know. I know I messed up.
Earl said it was a hold on. Empire Trader said, could it keep going up instead of seasonally going down? what y'all think? What y'all think? What Empire Trader still in here? Empire Trader said, could it keep going up instead of seasonally going down? What y'all think? Let's see. Oh, crystal ball. Oh, crystal ball. Empire Trading and his Mike Pence fly wants to know if the NASDAQ can keep going up. I don't freaking know, man. My name ain't Phil. I don't have the button of manipulation. The only thing we do is we look at these algorithmic signatures. Right? We look at these algorithmic signatures. What's everything? What's the basis? What's the basis of all of the ICT concepts? What's the basis? What one concept is incorporated into everything about the ICT concepts? Sonia, I ain't heard from you all night. What one concept is the basis for all the other ICT concepts?
I'm sorry, I stepped away.
That's all right. You back now.
Time?
Time is king. Time is the most important thing. What is the basis? What one ICT concept is the basis, the foundation, the one thing, the sine qua non for all the other ICT concepts. What is this one thing that you can see in all ICT concepts? It's all based around this one concept.
I know I should know this. Let's see, time, price, order flow.
You looking at my screen?
Now I am. Yeah. Power of three.
Power of three. Very good. Very power of three. And why is that? Why is that? Because the power of three is based off of what? Power three is the noun. What's the action that makes the power of three? Power three is based off of what?
Accumulation, manipulation, delivery,
Distribution. AMD, accumulation, manipulation, and distribution, right? You want to wait for smart money to accumulate their positions. What positions are they accumulating? If you're in a buy program, they're accumulating long positions, right? Then you want to see them manipulate, right? How do they manipulate? My favorite signature is the wig snatcher, going in the direction you want them to go, inducing long sellers to build more sell side liquidity to turn around and attack, manipulate, to use as rocket fuel to take you to the actual destination, right? And while they're accumulating their positions, right, they're starting an initial consolidation. While they're manipulating the sell side out, right, they're giving you a smart money reversal. And while they're distributing this distribution leg, this is when we participate in the move to go back there. And what does that give you? That gives you a initial consolidation, a smart money reversal, a low risk buy, then reach a terminus. That's a market maker buy model right there. Everything is built off of the power of three, right? When you open up on a day where you have a, all right, we open up today, right? We opened up today, right? We went down, then we went up and closed off the high. What did we do, right? We opened up by accumulate some positions. We then went down, took out some level of sell side. We manipulated. Then we went back up above a high, right? We accumulated, we manipulated, and we distributed and created an up close day. Everything about price action is built off of that old infamous power of three. Y'all thought the owl was just saying that on the tree back in the day, right? Y'all thought he was just, but he was telling you about the power of three. Hey man, that's all I got, man. I ain't got nothing else for y'all. We done been on here for almost 2 hours now. I jolly pies. Sherwin, I'm sorry for keeping you, sweetie. She said she gonna make you some lamb chops and asparagus for dinner tonight, just to make up for staying on this live so long.
Apology accepted.
What'd you say? What Sure said?
Apology accepted.
Oh. You know what's crazy? I don't even like lamb chops. My brother loves lamb chops. I don't like lamb chops. They taste weird to me. I don't like how lamb tastes. I don't like how lamb tastes. Just like I don't like how veal tastes. I don't know if it's the fact that I know that it's a little baby, because veal tastes funny, right? And if I ain't mistaken, I think veal is like a baby cow, right? But it tastes funny to me, right? And lamb tastes funny to me too. And lamb like a baby sheep or something like that. I don't know if I know it's a baby, so it tastes weird, but it need to get some of that oldness in it. Because I love steak. I love, you know what I'm saying? I love the full grown animals, but like the lamb and the veal, they taste weird. They taste weird to me.
Yeah, give me a good porterhouse. I'm good.
Oh man, I had me a porterhouse for my birthday shirt. When I tell you that thing was melting in my mouth, I say, boy, look at here. I had me a porterhouse on my birthday. Woo, Lord have mercy. And then, like, and to see the one thing I like about the porterhouse, right? It don't have as much fat as the ribeye, right? The ribeye be juicy. Ooh, it be juicy, but it's got more fat. But a porterhouse ain't got that much fat on it. The only thing I don't like about the porterhouse is cutting around that doggone big old T-bone. I don't like cutting around. And then it's got two separate cuts of meat, but it kind of balance out. It balance out where one side be more tender than the other one, and one side be more juicy than the other one. It balance out, and so I like to cut it all up and then mix up the meat, so I don't know which chunk I'm gonna be getting at any time, and I just be having a surprise, a surprise.
You know, cooking well done, do you?
No,
Okay.
no, I don't. Now, my son, he like medium. I like medium well. I can't do medium. He used to get medium well, but since he turned 16, he be getting medium now. And I be looking at him like, man, you don't want him to cook that a little bit more? But yeah, man. See, we just start talking about food, right? They said veal and lamb the same animal. I thought veal was a baby cow and lamb was a lamb. So veal is from a lamb? Why did I think veal came from a baby cow? Let me see here. Am I tripping? What animal? What animal am I? Does veal come from? Young cattle. Yeah. Veal comes from young cattle, calves. Yeah, it's a baby cow. Yeah, veal comes from a baby cow. 16 to 18 weeks old. Special fed veal. I ain't know they had all this special fed veal and bob veal. Many veal calves are raised on milk and soy-based diets, special fed or milk fed, and then some calves known as bob veal are slaughtered at even younger ages, sometimes as early as 2 hours. This typically used for like hot dogs. So the bob veal, they knock them off soon as they drop out. They mom just knock them off and put them in hot dogs and frozen dinners. And then the special fed veal, them the ones you be getting at the restaurant with the little sprinkles of parsley on top of them. Okay. And then lamb chops come from a lamb. All right. Yeah, baby cows. Yeah, it's baby cow. Yeah. All right. Yeah. I mean, I'm too fat to not know about food, man. I done start putting on that weight. Ever since I retired, I done start putting on that weight. You hear me? All right, man. This was a good one. I'm gonna go ahead and wrap it up there because we ain't doing nothing but talk about, you know what I'm saying, cows and lambs, and I might as well take off my shirt and start cutting my hair in the kitchen. Hey,
Thanks, Tim. Another 5 one.
all right, C-Walk. Hey, C-Walk, my cash app is $.
Gotcha.
Hey, man, tomorrow is Wednesday, so we got tape reading in the morning for the Diamond members. Tape reading in the morning for the Diamond members. My son, there's a football game Thursday night. Christopher's, he's in the marching band, right? So I'm gonna go to the game to support him. Junior, of course, graduated, so he's not playing football anymore, but Chris still playing in the marching band. So I'm going to the game Thursday night. So there will not be a price action recap Thursday night. So I'm going to try to make sure I do one tomorrow night. And yeah, that's all I got, man. Hey, if this was your first time tuning in to Tim's Tidbits, you probably not here right now because we've been on here a very long time. But if you got anything out of this, make sure you share it with somebody who's trying to do this, right? And I'm pretty sure they're gonna find some tips in here that's gonna help them out, right? Till next time I decide to get on Algo's in there and share my thoughts on this thing that we call price action. It's your boy Timothy Leroy Sr., aka Aranya Grande. That's just Big Spider. If you're on our below, I spend y'all be safe out here in these straight streets, man. Gone. Yeah.